Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the world of Bitcoin to take a look at the macro view, what's going on with Bitcoin slightly longer term. As I get into the video, if you find it useful and informative, hit the like button, I do appreciate that. If you're new to the channel, subscribe, tap the bell, select all the notifications, and you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord though guys, you are missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not check it out. Let's make a start with this one. There's a fair few things I just need to kind of talk about a little bit on the slightly longer term for BTC. So before we start about the actual charts, I think it's probably worth just doing a brief update on the on-chain stuff. So this is just top level data for BTC updated this morning. So we can see that we have inflows and outflows and the difference between the two. We are now net positive again. This happens, we're just kind of flipping between being slightly negative on exchanges and slightly positive on exchanges. Essentially, the market itself is reasonably balanced, which means it's neither bullish nor bearish. It's kind of just waiting for confirmation of which direction to take it in. We can see that we had 1.4925 million going on and 1.4925 coming off. Very, very flat. This is also noticeable with the balance of Bitcoin on exchanges here. Very, very flat. And also on the net difference 30-day average bars, you can see it was down, now it's up, and basically we're just finding equal amounts of buyers and equal amount of sellers and matching the two things together, and there's very, very minor fluctuations. So all in all, it looks like a very, very flat and uncertain market. That's essentially what this is. This is not bullish, it's not bearish, this is we don't know which direction it's going to go in. We're just going to kind of wait and see how it kind of plays out. That's kind of what it looks like, at least at the top level. When we go a little bit deeper, however, things actually change a little bit more. So when we take a look at Bitcoin Dust, we can see there's a continuation of selling pressure here. A lot of these wallets are the ones that are selling at these high prices that we see at the moment. These are the most vulnerable retail investors, in my humble opinion, holding just over maybe 0.01 BTC. Now, technically speaking, this is a count of all wallets that have over 0.01 BTC, okay? And we can see that these peaked out at 11,588,509 wallets. Now, however, we are down here at 11,471,536 wallets. So we've lost just over 100,000 wallets in a reasonably short space of time. So 100,000 retail investors essentially that had over 0.01 now no longer have that. Okay, now when there's a seller, there's always a buyer, and actually when we jump up into the additional wallets, we can see that there's some buying pressure here from the krill. This is over 0.1 Bitcoin. There's some buying pressure from the shrimps. This is over 1 Bitcoin, and some buying pressure from dolphins, which is over 10 Bitcoin. When we jump up into the larger size wallets, these are your institutional players, your big funds, your billionaires and multimillionaires. You can see the sharks. There's a slight increase, but it's nothing major, not in comparison to where it was, which of course these guys are the traders. Sharks over 100 Bitcoin, they accumulated before the pump to the upside, right? Then they're taking profits. The whales are doing what they do best, continuing to sell their Bitcoin to whoever wants to provide that exit liquidity. And the Kraken, of course, just coming back up to where it was before, 117 wallets. And these guys are the ones that are really heavily pushing the market in a direction of their choice. So essentially from the wallet side of things, we can see that it's not necessarily that it's a flat market, but what you are seeing is that whatever demand that is there, it is being equally met by supply. So when we were talking about the Bitcoin Dust, the 0.01 Bitcoin holders selling, well, they're selling to, it appeared, other retail investors, right? So the demand that is there is being equally met and so forth. So from our on-chain data, it's pretty much business as usual. There's nothing new to really kind of say that is categorically different, other than the fact that we are now net positive on the exchanges rather than net negative. And, you know, basically that will be potentially slightly bearish, but again, it's not a big enough number to really be making the whole bearish scenario over it, right? The difference of 55 Bitcoin on the exchanges, it is neither here nor there. So I'm going to say market incredibly neutral, or more specifically, the market is incredibly fragile. And I think that's probably the better way of saying it, because normally what we would like to see is we would like to see big funds coming in, big money coming in and accumulating, and we would like to see a decrease of or selling pressure from the retail side. This would actually allow for a neutral market still, but at least you'd have the backing of big financial players. Instead, you've got the backing at the moment of just retail investors, which unfortunately have the ability to overreact emotionally to market movements, and therefore a potentially very fragile market itself. Now, as we come down into the charts, we'll now take them, underpin that data with some take that on-chain data and underpin it with the chart data. The two things hand in hand go together, right? And we can't just look at a chart, draw a trend line and think that's what's going to play out when the data in the background might say one thing. So we'll park that for a second and take a look at smart money concepts here. This will help us understand whether or not we've got bigger issues or whether or not we can be bullish, right? And as per the video that I did this morning, I would say we're short-term bullish. I think there's definitely some potential to the upside still that it remains here. But like I said, it's a fragile market, so we want to be a little bit cautious with the short-term stuff. But from a macro standpoint, or the slightly larger time frame, what can we see from a smart money concept? So here we have Bitcoin USDT. Daily chart, Binance is the data source. And if we go ahead and just zoom this out a little bit, so we have a strong high and we have a weak low. This is an indication that we are going to find ourselves coming down towards our weak low and potentially lose this over time. Okay, this isn't something that would play out immediately. This is something that would take some time to play out. It would be something that would probably take several months or so to play out. The other things that we can see on our daily chart here is that we have these fair value gaps. These fair value gaps are created through imbalances in the order books. Okay, institutional money, big fund money comes in, okay, takes the price up, and in these areas here there was nobody selling to them, therefore the price jumps from this low to this high and this gap got left behind. Okay, this is really obviously visible on the larger time frames, more so than it is on the smaller time frames. Now, when we see these gaps, the price loves to come back down and fill them. Some clear examples of the past are, we had one over here. Okay, and this one got filled with this move here. Then, of course, we have another one over here, and this got filled most recently with this push up here. Okay, so all these gaps, they love to get filled. In fact, there's one right here that has not yet been filled. Okay, so when we analyze our smart money concepts, we know that there's still that potential to come up towards that 27, 28K that I spoke about this morning. Okay, there's a fair value gap right in there that hasn't yet been filled. It doesn't mean that we have to fill them right away. It can take years to fill those gaps if we needed to, specifically on these macro timeframes. And a good example of that is the all-time high that was broken over here. Yeah, this one here. I've already highlighted it with this yellow box, right? We left this gap behind. We've left these ones behind as well, by the way, guys. And we pushed up. It took us a year or so. Let me see, December 2020 down to June 2022 before we actually came back and filled that gap, right? So the gaps get left behind. You don't always see them getting filled out, but you know, usually price loves to come back down to them. Can happen reasonably quickly and should really happen within a good time frame, but it can take a while. Now, with these gaps here being so close knit to each other, I would expect us to move down and fill them out. The obvious is 19K, this area here. If you lose this one and you take this one out, chances are you are moving down quite significantly. Now, let's just zoom out just for a fraction here. On this macro view, we have a break of structure down here. This is represented in a red solid line. Okay, this is an indication that we are moving to the downside. Okay, we had our change of characteristic, we've had our break of structure, okay, and we haven't had a bullish change of characteristic to the upside yet. Okay, so on our bigger macro piece, we know that until we get a positive change of character like this one here, followed by a break of structure here, then you can get that big movement, right? Over this side, we've had the change of character, we've had the break of structure. Are we about to have that big movement? Or are we actually going to hold out and wait for us to get the bullish change of characteristics somewhere up here, and then a break of structure, and then to the moon, right? Lots of different ways of looking at it, but essentially at the moment, what information we actually have available to us with outside of speculation is that we've had a change of characteristic that was bearish, and we've had a break of structure that was bearish. We've had no change of characteristic to the upside. We have a weak low and we have a strong high, meaning that we have hit this premium area and its prices are premium, and we should be thinking about moving down at least to equilibrium and the discounted area at the weak low, where, because it's a weak low, chances are we lose that and go down significantly lower. And not only does that line up very nicely with what the on-chain data suggests to us, and the fact that we have no big backing, the fact that this market is neutral, or in my own words, fragile, then our expectations should be that we should be targeting out on the immediate front these two fair value gaps. On the slightly longer term, like medium term, we should be targeting out that 19K area, and on a slightly longer term, we should be targeting out that discounted range, which would be a double bottom at bare minimum. So ultimately, from a smart money concepts point of view, things are not looking overly that impressive to the upside, and we should potentially be thinking macro moves are to the downside. Now, when we take a look at this from a weekly standpoint and an Elliott-Wave theory point of view, my biggest concern is it's a big ABC structure taking us down and through some of these key areas in Bitcoin's history. Okay, so we have this area of previous resistance, or more specifically, previous supply area, then hasn't really been tested as a demand area. This actually happens to fall between 11,600 and 13,900. This would be a really nice area to kind of complete a bear market. However, that would not be what an Elliott-Wave theory structure would be looking for. Whereas it would be possible, it would be mighty confusing and wouldn't necessarily be aligned to a standard move. Instead, we would be targeting out more towards the 6,500 to 7,600 down here on the slightly lower range to be more aligned to what a C wave would look like. Again, no guarantee that any of that plays out, but some key areas on the chart of this weekly that I think are really important. Now, you can see that right up where we are, we're also up in that previous resistance. We can throw on our EMA. You can see that the 200 EMA on this weekly chart was acting as resistance. Right now, we're trying to see whether or not we can turn this EMA, this 200 EMA, into a support level, right? We broke it last week. We're testing it right now on this week, and we'll be looking to see whether or not we can rally this one up any further. Now, in terms of what's going on with our moving averages, we had the death cross, and that seems to be acting probably more in line with our expectations at this point, with the move to the downside. Looking at the 200 moving average as our resistance, that's the light blue line, and the yellow line is our 50 moving average, and you can see that we are below both of those right now. So death cross has occurred. That occurred week commencing the 6th of February, and it looks like we've still got some room to the downside. So not only does our oscillator also indicate that we have massive move to the downside, we also have the death cross, we also have the resistances, we have the premium area in terms of our smart money concepts and all that kind of stuff. Essentially, everything here for Bitcoin is looking reasonably bearish on the larger timeframes. There's very little to get too excited for right now. Expect corrections, essentially. Even a move down towards the 19,000 area would be heavily healthy, and it shouldn't be considered, a confirmation of a bias that the market is bearish in any way. There'll be other things that we should be looking for that. I think a nice kind of $19,000-$20,000 level would be a very healthy correction. When we come down deeper, though, and if we were to come down deeper, which I'm pretty confident on, then of course we'll start to get more of a confirmation over those bearish biases and so forth. So for the most part, it does look like a macro has to move down, and it wouldn't be unusual to think about a $19,000-$20,000 Bitcoin in any way, shape, or form. We haven't got any kind of big macro confirmational moves to the upside in terms of change of characteristics or anything like that. We are hitting the resistances. We have the death cross. It does look like macro needs to come down, even if there is only to come down in towards maybe this area here, 17,600, 18,800, which was a previous area of demand. So I'll leave the video there. Let me know what your thoughts are in the comments down below. If you have found it useful, hit the like button. If you're new, subscribe, and don't forget to join us down in Discord. Until the next one though, guys, have a fantastic day.